In June, the New York Times index of stocks rose 52 points. In July, another 25. At sea and on land, everyone seemed to be making money. It was a stampede of buying. And major speculators like John Jacob Raskob whipped up the frenzy. He told readers of the Ladies' Home Journal that now everyone could be rich. The stock market hit its all-time high. On September 5th, economist Roger Babson gave a speech to a group of businessmen. Sooner or later, a crash is coming, and it may be terrific. He'd been saying the same thing for 2 years, but now, for some reason, investors were listening. The market took a severe dip. They called it the Babson break. The next day, prices stabilized, but several days later, they began to drift lower. Though investors had no way of knowing it, the collapse had already begun. On September 12th, prices dropped 10%. They dipped sharply again on the 20th. Stock markets around the world were falling too. As the market floundered, financial leaders were as optimistic as ever. More so. Just 5 days before the crash, Thomas Lamont, acting head of the highly conservative Morgan Bank, wrote a letter to President Hoover. The future appears brilliant. Our securities are the most desirable in the world. Charles Mitchell assured nervous investors that things have never been better. Monday, October 21st. Hoover, along with the political and financial leaders of the country, arrives in Dearborn, Michigan, to celebrate the 50th anniversary of Edison's invention of the light bulb. The host is Henry Ford. The country is reminded that in 50 short years, men like Ford, Durant, and Edison had transformed America from a third-rate power into the industrial giant of the world. And while they celebrated, their world was beginning to fall apart.
The market opened in an absolutely free fall. An ugly crowd gathered outside the stock exchange, and it was described as making weird and threatening noises. It was indeed one of the worst days that had ever been seen down there.
There was a glimmer of hope on Black Thursday. Directly across from the New York Stock Exchange was a low, stately building, the House of Morgan. 22 years earlier, J. Pierpont Morgan had stopped the panic of 1907. October 24th, high noon. All eyes were now on acting head Thomas W. Lamont. Richard Whitney, vice president of the exchange, was chosen by the bankers to be their representative. At 1:30 in the afternoon, at the height of the panic, he strode across the floor and in a loud, clear voice ordered 10,000 shares of U.S. Steel at a price considerably higher than the last bid. He then went from post to post, shouting buy orders for key stocks. Morgan's bankers could no longer stem the tide. It was like trying to stop Niagara Falls. Everyone wanted to sell. AT&T down 50%. RCA, once $110 a share, couldn't find buyers at 26. Blue Ridge 100 plunged to $3, and still no buyers. On the floor, they had never seen anything like it.
A fistful of red orders, just like chickens with their head cut off. They didn't know which way to run.
William Durant, the bull of the bulls, now tried single-handedly to support the market. The further it plunged, the more of his millions he poured into it. In brokers' offices across the country, the small investors, the tailors, the grocers, the secretaries, stared at the moving ticker in numbed silence. Hope of an easy retirement, the new home, their children's education, everything was gone. 500 miles from Wall Street in the Atlantic, the luxury liner the Berengaria was heading home. From Michael Meehan's brokerage office, word spread through the ship. The bottom's fallen out of the market. Men came running out of their Turkish baths and towels. Card games ended abruptly. Everyone tried to jam into the tiny office yelling, "Sell at market." They had left England wealthy men. They docked in New York without a penny.
There's nothing unique about this. It is something which happens every 20 or 30 years, because that is about the length of the financial memory.
In the 1930s, Charles Mitchell was hounded by Senate committees and the IRS. The crash had left him $12 million in debt. Mitchell made a remarkable comeback. He paid off his debts and died in 1955, a highly respected figure on Wall Street. In 1936, William Durant filed for bankruptcy. His only assets, which he valued at $250, were the clothes on his back. In the late 30s, the founder of General Motors tried his hand at everything from running a bowling alley to selling a cure for dandruff. He died in 1947, still talking about making a comeback. Herbert Hoover spent much of the early 1930s fishing. He explained in a speech that fishing is a constant reminder of humility and of human frailty. For all men are equal before fishes. In 1940, the day before Thanksgiving, a photographer snapped this photograph of an old and very tired Jesse Livermore. Several hours later, Livermore would go into a men's washroom and put a bullet through his head. At the end of 1929, as they celebrated New Year's Eve, all that lay in the future. Nobody knew that the Great Depression was coming. Unemployment, breadlines, bank failures, this was unimaginable.
Then good luck came a knocking at my door.
But the bubble had burst.
Eyes were gray.
Gone was that innocent optimism, the confidence, the illusion of wealth without work. One era had ended. They toasted the coming of the 30s. But somewhere, deep down, they knew the party was over.
Blue sky smiling at me, nothing but blue skies do I see. I never saw the sun shining so bright, I never saw things going so right, noticing the days hurrying by.